Hey everybody, Alan Brochstein from 420 Investor and New Cannabis Ventures here with your weekly update. First, let me wish everybody a happy Thanksgiving. It sure was a happy Thanksgiving, but then there was the next day. So I like to start these videos out with just a brief discussion of the market and very interesting action Friday, of course. A day where you expect almost nothing to happen, thin trading, and it was pretty crazy. The global cannabis stock index did hold not only its closing low from Monday, but also the 2021 intraday low that was set Tuesday morning. So kind of interesting that despite all the problems in the global stock market, our market did hold those levels. And on top of it, one of the things I've been talking about a lot at 420 Investor is how there's a huge divergence in the market right now. While we made a new low in the global cannabis stock index this week, the American Cannabis Operators Index, as well as the ETF MSOS, have continued to hold their lows from Thursday, November 4th. Remember, it was Friday, November 5th that the market took off late in the day on rumors of Nancy Mace's legislation, which has been subsequently introduced. So the goal of these videos is to bring you up to speed with the most important news of the week, and I've been talking a lot the last few weeks because there's been so many earnings reports. This week was a little bit lighter. It was, number one, it was shorter. Number two, we're really past the peak of earnings season. So again, at New Cannabis Ventures, in our Sunday newsletters, we're just giving links to the most important news, and at 420 Investor, we run three types of press releases typically, sometimes a fourth kind, but typically three. That fourth one would be like management changes, but that's pretty rare. The three would be capital raises, M&A, and financial updates. And so this week we had a couple of financial updates. The first one was Air Wellness, and it was a disappointment. This is something I've been talking to my subscribers at 420 Investor about ahead of time, that the company had put some guidance out for 2022, and it seemed very likely that they would alter that, and they did. So that was really the first piece of news. That it was a miss for Q3 and reduced guidance ahead. And then the other, actually there were a couple of other ones, three other ones. The next, two out of the U.S. I was thinking of, and two out of Canada. The first one out of Canada was Humble and Fume. They've made a transition in their business that's de-emphasizing some lower margin business that they've done in the past in the United States. So their overall revenue did fall $7 million to $18 million, $18.1 million to be precise. But their gross profit, not just the margin, but the actual gross profit, actually expanded, and they did grow organically in Canada. So it was really this kind of intentional drop off in the U.S. But kind of interesting company, full disclosure, client in New Cannabis Venture as of last month. But that was their Q1 report, and you know these. So they're an ancillary company like High Tide, and I guess like Namaste, that kind of ancillary company, selling devices. But they're also getting into cannabis distribution in the United States, kind of leveraging that CSE listing. And then the other one out of Canada, so the third earnings report was Organogram, and that was one I had previewed ahead of time. I actually had a position in it going into the report in my model portfolios based on my research that the revenue would be good. I was a little bit uncomfortable about trying to predict the profitability, and it was a little bit better than expected, fortunately. So Organogram is like the fourth largest LP now in terms of LP revenue. I'll talk more about that point in just a moment, but 24.9 million. I think about 90% of that was flower sales, and almost all of it in Canada, although next quarter, as they've said recently, they'll be shipping again to Israel. So they have a new CEO there. That was their first call as well. And then the final earnings report news was Planet 13, another disappointment, something else I had kind of expected, and it was for the reasons I expected. They are struggling in their new Orange County location. It's just slower than they expected. They didn't pay very much to get into it, but it's not meeting expectations initially. Doing about $800,000 a month and losing money initially. So that's weighing on the overall results. They don't give forward guidance. I did listen to that call, and they talked about their Chicago and Florida plans as well. Something I talk about with my subscribers at 420 Investor. So the other types of news, I think the only other piece was, there were two. So there was a capital raise, which is Gauge Growth, which you know is being acquired by Terracin, a deal that's supposed to close in Q1. They borrowed $55 million to fund their retail network build out in Michigan. And then the other news was a M&A piece, High Tide. Speaking of High Tide, they're buying 80% of a CBD manufacturer called Newly for $31 million. So we continue to see a lot of Canadian companies, several Canadian companies, coming into the United States through the CBD market. High Tide they're like the LPs. They have the higher listing in the U.S., so they really can't go into direct cannabis operations. So that was the curated news or the press releases. And then the final, we have exclusive news. Our exclusive news tends to cover when we do summaries of our revenue tracker or our indices, which is done monthly. I'll have all that out next week. We'll be talking about that. We also do interviews, and we do 1 or 2 a week. It was Thanksgiving. We'd done 3 last week. We did 1 this week. And that was with Tilt Holdings. And Tilt Holdings CEO Gary Santo, we had interviewed him about 6 months ago. And this was an interesting interview. Full disclosure, again, they are a client of New Cannabis Ventures. Full disclosure on that. But the interview was really interesting. I find the company interesting. Very few companies do what they do, which is to operate within both the ancillary and direct cannabis operations. And so we talked about a lot of things, but that was really one of the main thrusts. I'd say there are 2 really short-term interesting things going on. One is how they're getting an increasing number of brands from the West into East Coast markets. They operate in Ohio, Massachusetts, and Pennsylvania. And then the other piece of it was they have this interesting relationship with the Shinnecock Nation, and the CEO, Gary Santo, discussed that as well, how that collaboration works. And they'll be able to, before New York launches for adult use, they'll be able to open the store out in Long Island. They'll have a lounge as well, and he talked about that in the interview. You can listen to the whole interview or just read our written summary. So that was all that for our newsletter tomorrow. Those are the links that we include. And then, each newsletter has a unique perspective that we share. This week, we kind of revisited an old theme. It's an increasing theme, which is more and more cannabis companies are becoming more diversified, both within and even beyond the cannabis industry. So we talked a lot about that, and I guess the big takeaway, I mentioned all the companies, but the big takeaway should be, I think investors, they may appreciate this diversification, and there are some benefits, obviously. If a really good company is able to do good things in more markets, that's great. There may be some synergies. But at the same time, it can be really confusing to investors. And we've written about this before, that you need to use what's called sum of the parts analysis. And while I didn't go over in this piece, we did link back to our prior piece. And the best example of using sum of the parts, in this piece, I talked about canopy growth a little bit. But in the prior piece, really a more stark example is Aphria. And if you think about what Aphria is now, it's a craft beer company, it's a European pharmaceutical distribution company, it's a hemp food company, and then of course it's a cannabis company. And each of these businesses will have different growth rates, different valuations, different levels of profitability. So we kind of talked about that this week, and it's just one of these natural things with the evolution of the space, where you have a lot of companies that are in the cannabis space, but that's not all they do. The number 1 revenue company related to cannabis is Scotts Miracle-Gro. That's not even half their business. It's like about a third of their business, maybe less, depending on if you're looking at revenue or profitability. So just a little reminder that revenue and profits need to be evaluated, not as if they're equal, but you need to understand really all the different ways that they're derived. So with that, it was a pretty short week. We'll keep the video short, and I know Friday was a little jarring, but hopefully next week is better. Take care, everybody.